Good afternoon, everyone, and thank you very much for joining this afternoon's Cuppa Club with GWCU, that's Great Western Credit Union, and Fair for All Finance. My name's Paul Pizzola, and I'm the Senior Investment Manager at Ethex, working with James and the team at GWCU on their upcoming offer. So before we get started, there is some housekeeping to do, and I'd like to let you know that the Cuppa Club is recorded and made available to watch. That this isn't a financial promotion, and if you do need advice, please do talk to an independent financial advisor. So, as many people will know, the Cuppa Club usually runs for 30 to 45 minutes, and it's an opportunity to meet and ask questions of the directors, in this case James Berry, and hear about why GWCU is such an impactful organisation. Today is slightly different, as we also are very pleased to have a panel of experts to talk about why the sector is so important too. And we have Harry and Brian and Neil. Brian and Neil are from Fair for All Finance, and I'll do a little bit more of an introduction to that organisation and their relationship with GWCU in a bit. And you know, really, it couldn't be a more opportune time to have this conversation, as we know that the cost of living is really beginning to bite for many individuals and families. So Ethex, you know, we are particularly keen to support GWCU and the credit union sector, because the impact is very directly apparent in helping individuals and families whilst building resilient communities and a fairer society through access to fair and ethical finance. And as such, it is a fantastic opportunity to ask questions, both of the sector and GWCU. So please do pop your questions into the chat box, and we'll aim to take those as we go along. So before we get started and the panel introduce themselves, just a little bit on Fair for All Finance. So Fair for All Finance is an organisation supporting the increase of availability of fair and affordable credit for people in financially vulnerable circumstances in the UK. They are not financial advisors and are not able to provide advice for those considering an investment, but bring to their panel their view of the deep social impact potential of supporting the UK's credit union sector to achieve this goal. Fair Finance for All first invested in Great Western last year with a capital loan, and seek to draw in additional external capital to the sector by offering match funding up to 1 million in addition to additional funding to Great Western by other investors. So as you know, we are going to be launching a bond in a couple of weeks' time to finance the transformational growth that GWCU is having in the Southwest, and more details will be coming out on that soon via email. And without further ado, I'd like to ask James, Brian, Harry and Neil to introduce themselves, and then we'll turn to questions. Thank you. So kicking off with you, James.
Great, thanks, Paul. Good afternoon, everybody. I'm James Berry, so I'm the Chief Executive of Great Western Credit Union. Really, I lead the team in developing and delivering our strategic ambition, which is to grow our scale and really the support that we offer for tens of thousands of people more across our area of the Southwest in future through the bond offer and with the support of our investors like Fair for All Finance.
Brilliant, thanks James. Brian?
Hi, everyone. Yeah, I'm Brian Doe. I'm investment manager at Fair for All Finance, leading on a number of our social investments in the community finance space, and happy to be here.
Brilliant. That's great, Brian. Many thanks. And Harry, over to you.
Thanks, Paul. Hello, everyone. My name is Harry Partington, and I've been a member of the credit union for 13 years. During that time, I've had various savings accounts and a couple of car loans. I was a volunteer director for 9 years, 7 of which I was chair of the board. Just very quickly, in 2018, I invested in a deferred shares offer, and that seemed like a better way to support the credit union than holding my money in a cash ISA, as it provided long-term capital in exchange for a fair return. Why the credit union? For me, I really like the ethos and values, and the fact that the reality is it brings different parts of our community together to help each other financially. So that's me.
Brilliant. Thanks, Harry. That's a great introduction. And Neil, if I may ask you to introduce yourself too, please.
Sure thing. Hello, everybody. So my name is Neil Alexander. I'm the Markets and Consumer Insights Manager at Fair for All Finance. What does that mean that I do? I look at the issues of a lack of access to financial products and services facing predominantly low-income households. So I look at the high-cost credit market, I look at community finance. I'm currently spending a lot of time looking at the impact on cost of living and the dangers of things like illegal money lending. I should probably put my hand up and say I'm also, as a volunteer, I'm a director of a credit union up here in Scotland. So I'm coming to you from Scotland today. I hope your weather's as good as ours. Nice to be here.
Brilliant. Well, I can tell you it's pretty grey this morning. It was a great start this morning, Neil, but the sun is shining now, so I think that's a good omen. And I'm actually going to turn back to you, Neil, first, and ask you to paint a bit of a picture of the credit union sector in the UK as it is today, where it's going tomorrow, and why it's so important to people, families, communities, and the overall health of the UK economy. So, feel free to be very expansive and paint the picture.
Great, thank you very much. So I'll take a few minutes, maybe about 5 minutes, just to run through some stuff. Forgive me to the people on the call if this seems simplistic. I know there will be people on the call who have a limited knowledge of the credit union scene. So we'll start with the basics. What are credit unions? They are not-for-profit cooperative structures. They are member-owned, member-controlled. They operate across what's called a common bond. Often that common bond is geographic, but it could be a community of place or interest. So you could have, and do have, NHS credit unions, police credit unions, taxi driver credit unions, as well as communities like Glasgow, where there will be 30+ credit unions across small postcode areas of Glasgow, in particular, or indeed the southwest of England. So whatever they have 4 similar core objects. What are those? They promote thrift. That's different from savings. They promote thrift. They train and educate members in the wise use of their money. They use their members' savings, their deposits, for mutual benefit, and they create sources of credit at a fair and a reasonable rate. And what are those fair and reasonable rates? They are price capped. So the credit unions in Britain, in England, Scotland, and Wales are price capped at 3% per month on a reducing balance. That's 42.6% APR maximum. Cannot exceed that under any circumstances. Can't add on admin fees to exceed that. That is the maximum amount that they can charge for lending. In Northern Ireland, it's different. It's 1% per month on a reducing balance, which amounts to about 12.6% APR. I'll come on to some Northern Irish distinction more in a second. So these are asset-locked mutuals with limited investment areas themselves. James there can't put all of his money into more speculative stuff. They can offer dividends and/or they could offer interest-bearing shares to members. And as I say, they come in all shapes and sizes. There is a long tail of very small credit unions, and there is a very small number of very large credit unions. They're regulated, obviously. They're regulated by the FCA, by the PRA, The money is perfectly safe. Financial Services Compensation Scheme operates. All deposits are protected. And essentially they offer, in my view, a sort of limited number of loan products. A handful of credit unions, bigger ones, offer mortgages, but in the main, these are unsecured loans. There are changes afoot in that sense, in that some credit unions will be able to offer a wider array of products, including HP agreements, including conditional sale, including some insurance products. So that will be a good thing in many people's view of the widening of credit products that are available. Current status of the sector, just very quickly. Over the last decade, I would characterise the credit union sector. The broad picture has been of gradual consolidation of credit unions alongside steady growth in membership, steady growth in loans, steady growth in deposits. So in England, there are about 150 credit unions. That's down about 100 in a decade through a number of reasons. And as of Q3 2022, the last time we had some figures, there is an adult membership of about 900,000 people in England. If you extend that into Great Britain, it's about 1.3. And if you include Northern Ireland, it gets you up to about 2 million. So Northern Ireland disproportionately has a very large membership base. In terms of loans, again, you're looking at about £850 million out on loan in England. If you added Scotland and Wales to that, it'd be about 1.3 billion. And if you added Northern Ireland, you get up nearer the 2 billion, about 1.9 billion if you add Northern Ireland to that as well. In terms of people's deposits, the money that is used to lend, again, in England, about 1.3 billion pounds held on deposit. People's shares across Great Britain, that's about just over 2 billion. And if you add Northern Ireland again, you're up to nearer 4 billion, about 3.8 billion there. So you can see that there is a big difference there. About 1 in 2 people in Northern Ireland, 1 in 2 adults in Northern Ireland are members of credit union. It's about 1 in 52 in England. So they are hidden in plain sight in many ways on the British mainland. You know, one of the things we want to do is kind of highlight that. Who uses them? Well, according to the FCA, according to the Financial Lives Survey of the FCA, about half of all loans that were issued, this is 2020 figures, about half of all loans that were issued to people who had an income over 30,000 and about half to people who had an income under 30,000. So the same thing with tenure. About half of all loans, according to the FCA, went to people who had an asset of some kind, so a home either owned outright or with a mortgage, and about half went to people who didn't possess that type of asset. So it's not the preserve of the lowest income households. It needs a range of borrowers in which to flourish. It does, though, offer, unlike many other mainstream financial institutions, very small loans over a very short term to low income households. Some credit unions specialise in doing that. Others have a wider, more diverse book. But the economics of lending at a capped rate mean that offering small sum credit is very difficult. They are used by hundreds of thousands of households across all ethnicities, income levels as well. People of all incomes are members, often using it for ethical purposes, often using it for financial reasons. So they provide lifelines, in my view, for communities, from replacing damaged white goods to paying for a kitchen, paying for a holiday, debt consolidation, aspirational stuff, as well as essential stuff. The big worry out there for everybody right now is, of course, the cost of living on the back of a pandemic as well. You wouldn't kind of start from here if you could avoid it. On the back of a pandemic, which did impact the income from lending, not just of mainstream lenders, but of credit unions. The other big issue for us at Fair for All is the demise of forms of high cost credit and changes in lender behaviour more generally, which limits the choices that people have, particularly those on low incomes or with thin or poor credit files. So we've seen this massive rise in friends and family borrowing, and we believe there is a potential danger of illegal money lending kind of becoming a much bigger thing. So another reason why credit unions are very important. Sector, in our view, is addressing many challenges. It's a good euphemism for lots of things, isn't it? Challenges. Challenges of technology, marketing, personnel, governance, the shift to online whilst retaining a kind of community focus. All of these things are things that people like Great Western are addressing very well, in our opinion. Our aspirational vision at Fair for All and Brian will talk more about this, our aspirational vision for the credit union movement is potentially things like continued consolidation, larger credit unions taking over smaller ones, but maintaining a local provision, shared services potentially, the kind of economies of scale of back office, that kind of thing. An expanded common bond, which would allow us to have, Southwest parts of, Southwest Credit Union, Greater London, a market that looks more like the United States, a market that looks more like Ireland, where you have, as I say, a much greater depth of membership, but also in the US in particular, and what might come here, a greater range of products as well. We think that there are issues around kind of sustainability and capability development that allow credit unions to unlock the lending capital they have. So, those figures from earlier on, if you were jotting them down, you'd have realised there's over £400 million of unallocated money in England. You add that to Scotland and Wales, there's over 800 million of unallocated funds. So there's a lot of spare capacity there. But we are hoping that, as things develop, you will see an improved capital asset ratio, give credit unions the confidence to invest in scale and lending, and give people on this call the confidence to invest in them too. So thanks for listening. Hope that wasn't too quick a trot through. Apologies for the stream of consciousness that I sound like sometimes, but that will get us started.
Brilliant, Neil. That was a real tour de force, and I think you picked up some very some of the points about it's already a large sector serving a lot of people, and in some ways, more developed in the States, more developed in Northern Ireland. So there's a lot of headroom to continue the sort of mission ethical based lending in the UK. So on that note, turning to Brian, can you give the audience your perspective on why now is a good time to invest and drive the impact of GWCU?
Thank you, Paul. Yeah, and just to start, Fair for All Finance was set up to address, the difficult reality that there is massive market gap in fair and affordable financial services, especially credit, available to people in financially vulnerable circumstances. And for those who don't have a credit profile to access affordable short-term credit when they need it to manage a range of shocks and difficulties that they face in their lives, something that many take for granted. And this demand is really only increasing without better ethical finance options in the marketplace. Millions in the UK are impacted. We know that when people are unable to access short-term credits when they need it, they're forced to turn to very high-cost loans that can actually compound their problems. And when those aren't available, many turn to even less favorable options, including illegal lending, which can be harmful in a number of ways. Fair for All Finance is investing into community finance providers that are best placed to lend responsibly and also grow their outreach to these underserved customers in a way that maximizes the possibility for positive outcomes for these customers. And we recognize that this is difficult, it's expensive, it requires an ability to manage a very complex risk assessment when approving loans in order to be sure you're acting responsibly in this space. So, towards this goal, we're working closely with credit unions because they are trusted community lenders located across the UK with, as Neil described, a large amount of capacity and future potential, really, through the deployment of their members' deposits to offer more affordable credit options to people who may be in financial difficulty. And they can also offer services beyond credit that other lenders don't offer. However, in looking at the credit union sector from an investment perspective, you can see, and Neil talked about this a bit, that they often earn quite low margins on their services in order to keep loans affordable for their members. And as was mentioned, they actually face a cap on the maximum interest rate that they can charge on their loans. So we find many credit unions are actually reluctant to sort of embark on an ambitious scale plan to and sort of outreach strategy to more vulnerable sort of members in their base. Often this just comes down to the fact they just don't have sort of the capital in place from, surpluses generated from lending to support this kind of ambitious growth and to innovate their operations. And we know the regulatory authorities that Neil mentioned actually put a minimum level of regulatory capital that they actually have to have on their balance sheet in order to be in compliance. So really without that capital in place, there's no growth, because the more you grow, the more of that capital you need to have there in reserve. So supporting this kind of regulatory capital is where our investment support is typically most exciting in the credit union sector. But in our view, when kind of looking at different credit unions in the market, there really are some key steps that they need to take before really embarking on sort of accessing this sort of external investment capital in order to really maximize the chance that they're successful at both, serving more members, more financially vulnerable members that are difficult to serve, while also ensuring that they're protecting the sort of stability and sustainability of their organization, and of course, most importantly, protecting their members' deposits in the credit union. I mean, what we're looking for in particular in terms of this is really that, there's credit unions that really have that sort of bold, solid strategy to diversify their membership, to see that balanced growth that Neil mentioned. They have an ambition to sort of diversify their loan products as appropriate to serve a wider range of member needs. And they have a kind of a deep understanding of the operational investments. And typically this is quite particularly in the tech side, just investments that would be critical in the current environment to really enable a credit union to see their operations become less expensive over time, but still able to support those harder to serve members with a really high level of service quality. And really without this sort of long range sustainability plan, it's difficult to justify coming in to support the capital resources of a credit union. So ultimately, I mean, this is really why we see the current time as exciting to support financial inclusion and the credit union sector's ability to sort of better reach financially vulnerable customers within their memberships. But it's also a very challenging time, and Neil spoke to this a bit as well. In Great Western's growth journey so far, and its plans for future kind of sustainable growth trajectory in Southwest England, we've recognized that these kind of critical strategies that we're looking at are being put in place in order to increase support to those more financially vulnerable borrowers in the region in a responsible and sustainable way. So yeah, that would be sort of my response there.
Brilliant. Thank you, Brian. That packed in a lot in there, and I know that Harry, as a former chairman of GWCU, I believe, and now an investor and a member, as you said, it would be really interesting to hear you unpack the opportunities and the challenges as you see them. And I'm thinking specifically about digital. What's the digital platform now that GWCU has responded to COVID and is responding to the cost of living crisis? And again, do feel free to expand upon the question, and if there's anything that's coming through in the chat box that makes sense for you to answer, then please sort of weave that into your response. Thank you.
Thanks, Paul. I will come back to your digital point, but I've not been directly involved for 4 years now, so I'll leave James to give you the most up-to-date position. But if I start off with just a quick summary of what I think the opportunities and challenges are, I think firstly, from Great Western Credit Union's perspective, the big opportunity is literally reaching more members. So when I joined the credit union back in 2010, there were about 3,000 members, but there are now 18,000 members, and that's really impressive growth. But then if you look at the common bond area, so Neil talked about common bonds, that's now 3 million people across our geographical area in the Southwest. So as you can see, going from 3,000 to 18,000 members is great, but wow, is there a massive headroom with a 3 million person common bond area. But to bring that to life, that means there's still a huge opportunity to not just meet their financial needs, but to deliver social impact and financial stability for all those families, and then making people and communities better off as a result. So I think from a credit union perspective, there's just a huge opportunity there. From an investor perspective, and just to be clear, my investment is pretty modest. It's what I could afford. For me, the next phase is about understanding what a potentially modest investment could give me. Well, it's a further support for the credit union and its growth. And GWCU really doesn't have a particular challenge in raising deposits to lend out. Bristol and the Southwest overall has a good number of fairly affluent areas that it can draw on and has drawn on to raise funds to then lend out. But what it does need are people potentially like me to say, actually, I'm prepared to not put my savings into a cash product with the credit union, but I'm prepared to take a bit more of a risk and to understand those risks and put my money into something like the bond offer, which of course does have an attractive return as well. So I think as an investor, albeit a small investor, there's an opportunity there, as long as, of course, people understand the risks associated with that. What's the biggest challenge? I think for me, it's drifting back to your question, Paul. The real challenge is creating capacity to keep products and services up to date, not just up to date, but to anticipate changing needs and behaviours of members. And that includes reaching members in the first place. In the past, credit unions in certainly England have sometimes struggled for awareness and consideration amongst their target groups, but investment of the kind that we're talking about today not just provides capital, but it also enables the credit union to reach, through its marketing efforts, more members. And then linking to the digital point, actually having the financial resources and, of course, skilled people to continue improving and developing that digital proposition is critical. But you can't forget that actually sustaining and evolving the more traditional ways of accessing credit union services is also important, because although the vast majority of credit union members have a phone, the reality is some of them still prefer more traditional methods of dealing with the credit union. It's about how you evolve that access in a modern world and in a modern way, but also in a point that Brian made, in a cost-efficient way. You talked briefly about cost of living, and I think a key thing that GWCU did was upgrade its digital platform in late 2020, and that was definitely in response to member needs and changing behaviours. I'd seen that when I was on the board, and in fact that development was funded by the external investment that the credit union raised in 2018, 2019, including my own modest investment. Something they did during COVID was just fantastic. They introduced a 0% loan scheme for NHS frontline workers during the pandemic. And for me, that showed a real understanding of the specific pressures being felt by those working in the NHS at the time. And I think it's a good demonstration of a way that a local institution like the credit union can react quickly and appropriately to local needs. More broadly, GWCU produced regular communications to members about how they can better manage their finances. And of course, the particular focus in recent times has been on money saving tips, making your money go further. And, you know, it's not just people on limited means for whom that's important. We are all challenged by the cost of living crisis. And I think that brings home for me the breadth of the credit union appeal. It's for all of us. The final point I was going to make was something that I found really interesting, and that is that over the past couple of years, GWCU has doubled the number of employer partners that it works with. So that's a really interesting thing from my perspective, because what that means is that the credit union can extend its reach to all sorts of people it might not normally be able to get to through employer propositions. So it's able to offer loans and savings to the employees of their partners, and it's all done through very, very straightforward payroll deduction. Now that's really popular with the employees of those partners, who, by the way, include local authorities, housing associations and charities, as well as local businesses across the region. So that does two things. One, it extends the reach, but secondly, as Brian mentioned, it starts to help the diversification of the membership base. So there's a variety of different employees in those employers, but many of them may have better earnings than more traditional credit union members. So that enables the credit union to better balance its loan book, which was something that Neil mentioned, and therefore de-risk its overall balance sheet. So quite a lot's been going on. It's been fantastic. You know, I've not been directly involved for 4 years now, but it's fantastic to see the continued growth. And I'm quite excited to see what the next 5 years are going to hold for GWCU.
Brilliant, Harry. Thank you so much for that insight, and quite a lot for James to deliver now, I think, in terms of what he's going to talk about, because what you've brought up an awful lot. But what I'm actually hearing is that there's a very broad opportunity to grow the organisation across all sorts of different customer segments, citizens, and it's a bank for everybody, is what I'm hearing actually, and that's, you know, the opportunity. So I have been asked to ask you, James, about, you know, some of your products and what that looks like. I'm also very interested in, you know, in how you bring this home to the audience in terms of the impacts that you've seen and what the biggest impressions have been on you at the individual and the community level. And, you know, maybe if you could just touch on how that digital transformation is going to allow you to reach this much broader, diverse, common bond of 3 million people across the region. It'd be really great to hear your insight on that.
Thanks, Paul. I'll do my best to live up to that introduction and briefing. And thank you especially to Neil, to Brian and to Harry, as well as yourselves, for setting us up so well with their contributions today. It's really made my job much more one of hopefully summing up, rather than having to run through all the things that they've already said about Great Western Credit Union or about the credit union sector more broadly. I think for me, just to pick up on the last point first, in terms of the digital transformation, that's really been a game changer for Great Western Credit Union over the last few years. So if we look back to some of the things that we saw before COVID, so going back to probably about 3 years ago this month actually, We were very much a manually based organisation. We were very paper based. Our loan application process had over 50 different steps in it. You know, from somebody thinking that they might need a loan to actually getting some funds in their hands, 50 different things that we had to do to get them from one point to the other. That's now down to 15 or fewer, depending on the circumstances of the particular application. And that's really a testament to the digital platform that we've invested in and that we've introduced, that has really driven efficiency. But it's driven efficiency in a way that helps us to spend the quality time we need to with the applicants who need us. One of the big things that makes credit unions different and that leads us to have a much better outcome in terms of our lending than people's credit scores would predict is that we're able to spend more time with the applicants who need it to help them to understand the impact of borrowing on their finances and to do some of that education and the wise use of money that Neil mentioned earlier as one of the core objects of a credit union. So that's enabled us really to triple the number of loan applications that we've been able to deal with over the last couple of years, and to do that without increasing headcount. And of course, that's a really critical part of our future story as well. And one of the reasons why I think Brian would echo that Fair for All Finance have been very keen to work with Great Western Credit Union, because we have got a transformed operating model that enables us to grow really efficiently, but also in a way that supports people with the things that they need in terms of responsible, affordable, ethical financial services. So that's a really big part of what we've done. I think another really tangible thing that we've seen and we've implemented that's made a real difference for people over the course both of COVID and more recently through cost of living issues, which of course challenge our members, or many of them, more than they challenge the population as a whole. Many of our members are on lower incomes, and the cost of essentials has risen much faster and higher than price rises more generally, even though they've been pretty amazingly high as well. So we've really seen the issues with members being able to afford to repay loans grow to some extent. But what we've done is really set up a team to support them within the credit union, our member support team. And that team helps members who are struggling with their loan repayments using a range of different approaches. So, for example, offering payment holidays where people are particularly struggling, restructuring loans so that people can maintain a positive relationship and they can maintain their access to credit, which is really important for folks when the small sum credit market as a whole has been shrinking, as Brian said. And really, I think the feedback we've had from being able to support people through the challenges that they're facing at these difficult times has been amazing. People really value the fact that somebody's there to look after them and to help them as much as we're able to. Now, I know there are a couple of questions in the chat about some of the things that that might mean in terms of default rates, and I will touch on that in a little while, but I think just to say the impact overall for me is massive. My own background, I grew up in a council house in a housing estate just on the edge of Liverpool in the northwest, a place called Kirby. 7 of us in a tiny little 3-bedroom council house. One of the things that I remember as a kid was seeing a cardboard sign in somebody's window on the estate, Kirby Credit Union, and we never really knew very much about what it was. And if we had known, it would have been absolutely ideal for us. My dad worked, so it wasn't that we were penniless. You know, we had a reasonable income, but with lots of mouths to feed and lots of things to buy from time to time. Help with cash flow from time to time would have been amazing. But of course, for whatever reason, we never went to knock on the door where the cardboard sign was in the window, and it probably wasn't really the best introduction either to a financial service to see a cardboard sign in somebody's window. So I think one of the things that really matters to me is being able to take the credit union message out to all those people who need us, and to show that we are a modern, accessible, affordable, responsible and ethical way to manage their financial affairs that's here to work for them and with them, and really to make a big difference in that way, whether it's the single mum who needs to replace a broken washing machine, or whether it's one of our employer partner members who needs to borrow a bit more for a car to get her to work. And we really can make a difference to many thousands of people across our area of the southwest. And we are the point of us having this conversation today is that we're now looking to do so much more as well. So building on our 23-year track record of delivery, we're looking to increase our scale and our impact across our area of the Southwest. And we're doing that through an 8-year bond, which will have a 6.5% fixed rate of interest as the return per year. And with that, if we're successful in raising our initial target of £400,000, then we will be able to do an amazing amount more good with money across the next 8 years and beyond. And that's really what we're looking to support with your help over the next couple of months once the offer's live on the Ethex platform. I think if I just turn briefly to a couple of the questions in the chat, one or two that are reasonably detailed, I can answer them as best I can now, but obviously there will be opportunity as well when the offer's live to ask those detailed questions and get a more formal written response to them as well. In terms of the current capital asset ratio, which is one of the questions, at the end of the last financial year, we were just under 10%, so rather just over 9%, versus our regulatory requirement, which was just under 6%. So a cushion there between the reg requirement and our own capital. Default rates, they do vary very much depending on the circumstances of the borrower and the type of channel. So our Money at Work partnerships, for example, have really low default rates. Loans to members who are probably in slightly less stable circumstances, of course, have slightly higher default rates. And the default rates don't always mean that somebody is unable to repay completely. Often it means they just need a bit more help with managing their money. Overall, though, across the last 5 years, we've varied from 5% in the better times to 10% in terms of the rate of impairment cost versus the loan book. So it has been very varied. The last year or two, particularly coming out of COVID and through the cost of living, have been higher than usual. We have started seeing those rates coming down over the last few months, though, which has been very good. And yeah, we do expect them to continue to come down as people's circumstances do start to improve. Just have a quick look through to see if there are any other things I can answer reasonably quickly. I think Fair for All finance funding comes ultimately from the dormant bank account monies. Brian, is that right?
Yeah, thanks, James. Yeah, our funding comes from the Dormant Assets Scheme, which is led by the financial industry and backed by the UK government, and is actually coming from dormant bank and building society accounts that can now be used to help good causes, and financial inclusion is included as one of those causes, which is sort of what we were set up under.
Thanks, Brian. And just in terms of, there's a really important question actually in a regulatory sense in the chat, which is the difference in security between a bondholder and a depositor. And it's really important to be clear that a depositor, so somebody who has a savings deposit with the credit union, is protected by the Financial Services Compensation Scheme. So their money is protected up to the £85,000 compensation limit that applies in all of the deposit takers within GB. The bondholders, for the current issue that we're looking to raise for now, they're not protected by the Financial Services Compensation Scheme. So it is money that's at risk. So it really is important to be clear about that and to make sure that nobody invests expecting the money to be protected in the same way as a saving deposit is not.
Great. James, that's fantastic. I mean, just a couple of things to say. I think the target raise is £400,000, which is success. Which, let's say we get to £400,000, that'll be matched by Fair for All Finance by £400,000. So in total, that would be 800,000. The maximum GWC are aiming to raise is £1 million. So if we all reach that target, then Fair Finance for All would match up to $1 million. So that would be 2 million in total. So actually could make quite a big difference to your balance sheet in terms of what you're able to achieve. And just to be very, very clear, we're launching the bond in the first or second week of April. There's going to be an offer document which will go into all the usual risks, so you can sort of dive a bit more deeply to understand those and what the business model is hoping to achieve. And that is an 8-year bond. So repaid at the end of 8 years, the capital with a 6.5% interest rate paid annually every year. So I would like to thank James, Brian, Neil, and Harry for a really fantastic tour de force of the sector, and you know, diving a bit more deeply into GWCU and the opportunity and the impacts that it creates. So thank you to my panelists. Thank you to everyone who's joined today. As I said, the offer is due to open April, and we'll send out a notice email to all Ethex investors, and it just remains for the panelists to say goodbye to the audience.
Bye-bye.
Thank you, everybody, for attending today.
Brilliant.
Thank you so much, Paul. Thank you, everyone.
Thank you so much. Goodbye.
Thanks.
Bye.
Bye-bye.